This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S. could start buying back crude oil for the Strategic Petroleum Reserve late this year after President Joe Biden last year directed the largest ever sale from the stockpile, Energy Secretary Jennifer Granholm said. The administration intended to repurchase crude oil for the SPR when prices were at or below about $67 to $72 a barrel. After last year's 180 million barrel sale drove the level of the stockpile to its lowest since 1983, the White House said in October. Biden conducted the sale to relieve oil prices that shot up after Russia invaded Ukraine.
At least 3 oil licenses in the semi-autonomous Kurdistan region of northern Iraq are shut in or running at reduced rates on Wednesday following a halt to the northern export pipeline, company statements showed, with more outages on the horizon. Iraq was forced to halt around 450,000 barrels per day, BPD, of crude exports, or 0.5% of global oil supply, from the Kurdistan region, Agri, on Saturday through a pipeline that runs from its northern Kirkuk oil fields to the Turkish port of Ceyhan. The stoppage has helped boost oil prices in recent days back to near $80 per BBL.
Moving on to the top news in the energy sector.
Australia's gasoline and diesel imports are expected to rise 2% to hit a record for a second straight year due to a drop in domestic production and a post-COVID economic recovery boosting fuel demand, traders, analysts and an industry source said. In the near term, gasoline imports are set to jump due to a roughly 5-week outage at a gasoline-making unit at Ampol's Lytton refinery in Brisbane, followed by maintenance work in May at Viva Energy's refinery near Melbourne. This presents an opportunity for sellers in Singapore and South Korea, whose supplies make up around half of total Australian gas oil imports and nearly 80% of gasoline purchases, data from Wood Mackenzie and Rystad Energy showed.
The European Union is entering the final stage of acrimonious talks on Wednesday on how to treat hydrogen produced from nuclear energy, a row that threatens to thwart a deal on more ambitious renewable energy goals. Negotiators from EU countries and the European Parliament are meeting to reach a deal on how fast to expand renewable energy sources this decade, a central pillar of the EU's efforts to fight climate change. One of the key goals in the renewable energy policy is for every country in the 27-nation EU to use a certain amount of renewable fuels, such as hydrogen, as an energy source in industry by 2030. Next, we have the top news in metal markets. Copper prices rose in London on Wednesday, helped by easing concerns about the banking sector, while the broader base metals market continued to look for further evidence of China's demand recovering. Metals prices bounced back in recent days as stronger risk on sentiment, with banking sector woes subsiding, improved market confidence. Benchmark copper on the London Metal Exchange, LME, was up 0.7% at $9,044 a ton in official open outcry trading.
Gold prices retreated on Wednesday as investors trickled back into riskier assets, betting that risks of contagion from the global banking crisis have been curbed for now. Spot gold was trading 0.3% lower at $1,967.22 per ounce, as of 12:10 GMT. U.S. gold futures slipped 0.2% to $1,968.70. Gold has retreated as markets are going risk-on as fears of contagion within the banking sector abates, said independent analyst Ross Norman. European shares rose, echoing an upbeat mood in Asian markets.
We will now look at the top news in the agricultural sector.
Poland wants the European Union to use all tools at its disposal to limit the amount of Ukrainian grain entering the bloc's market, the Prime Minister said on Wednesday, amid fury among farmers over the effect of imports on Polish grain prices. Mounting anger in the countryside over the influx of Ukrainian grain poses a major headache for Poland's ruling Nationalist Law and Justice (PiS) party in an election year, as its conservative voter base mainly lives in rural areas and small towns. We demand the use of all regulatory instruments, quotas, tariffs, which will limit or block the import of Ukrainian grain into Poland, Mateusz Morawiecki told a news conference. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.